It's tender. It is the weekend edition. Welcome everybody. Happy Friday. Hope everybody had a great trading day today. I just want to explain to you real quick something about this market. It keeps grinding to the upside. It seems like it's never ending. As we consolidate, you let the bulls hold there, and they keep pushing it up higher and higher. Today was a pretty tough day in itself. A lot of stocks were just, almost like they're scared, like they're sketchy. They'd go down and grind back up. Earnings are all over the place. Most of the earnings, when there's hits or misses, are gapping to the downside and just rocketing the next morning. So a lot of shenanigans happening. But most of all, I just really want to explain. I'm hearing a lot of people talking about this market's going to dump, and they're going against the grain. They're trying to short this market each and every day. I've seen it over and over, and they keep getting ran over. That's, you got to go with the trend. I'm going to show you these charts here in just a minute and show you why you just can't fight. You can't fight the trend. Try to go with it. Yes, I know there's people that are able to short the market and individual names for pullbacks, and that's, it's a little bit more risky, but if you're good at it, you're good. That's your thing. I like to go with the trend. I've played that other game before. I've tried it over and over, and it just doesn't work out for me. So my recommendation, if you are not trade advice, if you are new at this game, just ride the trend. Look for the stocks that are trending up with the overall market. So here we go. Let's jump into the charts and check out this weekend edition. So we are going to go. Let me get my face off. We are going to go into SPX on the weekly down to the daily. Check out ES SPY, and we'll check out the VIX. Now we'll go through all of the standard technical analysis and a little bit of Elliott wave theory, and then we'll halt that video. We'll go on to Patreons. If you're our Patreon, we'll go over much more. You see the tickers on the bottom there. Hood seems to be the talk of the town right now. So we are actually playing Hood right now, and we'll show you how. So, okay, let's get into it. Patreon's only $5 per month. Also, join us in the options guy. Look in the description. It's a free Discord. If you don't want to pay for anything, I understand. It's a free Discord. Join us there. You can talk to many good traders. Okay, so SPX on the weekly, we have a doji. Is that a topping doji? Most likely not. It's a very bullish doji. We pushed off the 8 MA, continued to hold all of the MAs. The trend line to the upside. We're well over the pivots. You can't argue that this is not a bullish tape. We do have some divergence forming, but that's just a condition. That's just telling us that momentum's slowing down while the price action is grinding to the upside. So just don't fight that trend. RSI, it's losing a little bit of weakness, but we're still here in overbought territory. We're just grinding to the upside. We're staying in this territory. There's nothing you can do. You can consider this that these are broken. I've heard that before on Theotrade. These are broken. Don't listen to these. The trend is up right now. Okay, let's move over to the daily. The daily trend is our friend. That's why I keep saying that. I say trend is our friend. We ride. I've been saying it on this YouTube video since I started in January. Okay, so on the daily, we have our Elliott wave count. We think this is an ending, expanding diagonal. So that's how we're playing it. We have wave 1, 2, 3, down to wave 4. And on an expanding diagonal, we're working on wave 5. So what does that mean for wave 5? It means that wave 1 has to be smaller than wave 3, which has to be smaller than wave 5. So if wave 5 has to be bigger than wave 3, what did we do? We measured the bottom of wave 3 to the top of wave 3 and expanded it from the bottom of wave 5. The 100% is right here at the 4460 area. That is minimum. So we need a tick above there for this to play out correctly for an expanding diagonal. If we fail from this point, then we have to rework our pattern. I don't really have much more of a bullish or bearish scenario. I actually have two more bullish scenarios, but this is the most conservative one. So what can happen from here? We can go up to that 100% range, pop above it, break down. We can go up to the top of the wedge, break down. We can break above the wedge, back test it and go higher, or back test it, break back down into it, and that's a fake break, and that will be even more bearish. I consider that more bearish than before, than the other scenarios. Okay, so this 1618 is a possible target if we do break above the wedge. We are all-time highs, so that's all we have to rely on. We don't have any support or resistances at that point. So these are our levels. 100%, wedge top, 1618. That's all we have right now. If we continue to go higher than that, then we will reevaluate. And we do have a wave count for that as well. Okay, so let's go over to the VIX. We just had by the way, we're over all the MAs. Same with this one. Over all the pivots, over all the MAs, had a follow through candle. VIX. We use the VIX futures. The VXX tracks the VIX futures. So this is our huge support resistance line. We came back under it. It's hard to be bearish when this is falling. The VIX falls, the market goes up. That's just the way it works, you guys. So if you're watching all these indicators and you're trying to short the market, it's going to be real tough. It's not impossible, but it's tough. Okay, that's all I had to show you on the VIX. Let's go over to SPY. Check out some volume. Okay, we had the volume, none. It's minuscule. So, you know, this isn't showing any sort of breakout. Even though we're price is starting to break out from this range. We've been in this range for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Started to break out from it. We need to see some volume next week, maybe on Monday, and we'll look at that. Let's check out the weekly just to see what the kind of volume we had this whole week. I imagine it's not much yet. Yeah, looking pretty bad because we were consolidating this whole week. Same thing with SPX. We're over everything, just bullish on all aspects. We do have extended on the RSI and the MACD divergences, negative divergence, losing strength, losing momentum. Go to the ES, down on the 65-minute chart. We use 65-minute candles, so each and every candle is equal throughout the trading day. Okay, so we consolidated all week, a little bit last week as well, kept going, oscillating back and forth, triangulating. We finally broke out from that downtrend line, also perhaps a triangle if you want to say that. Came up and we're consolidating. Just a day where we had the jobs number affecting the way we were trading. Big move to the downside, big move to the upside. It was just oscillating back and forth, trying to figure out what was happening. And there was all sorts of flow just going all over the place. So it was a tough day to trade. Some days like this, you might want to sit out. We had a little bit of a drawdown. We had some great trades and we had some pullbacks as well. So, but we're not worried about it. We're playing next week. We have plenty of time to work those trades out. Just part of trading, folks. Let's see. Let's go back to... Okay, we're going to finish this for non-members. Let's go back to the SPX and the options expected move for the week. I've been keying back on this for a little bit just to show us what's happening. You know, the options expected move is what the options market expects for the market to have for its range, okay? The white line represents where the week starts. That's where we'll start on Monday. We have a 48-point move to the upside or a 48-point move to the downside. Said so by the market. You go over here on a Friday, the 13th. Ooh, next week, Friday the 13th, it shows over here, plus or minus 48 points. That's where I get this from. It is not a secret. All we do is hand plot it out. We just duplicate the line, place it where it needs to be. Okay, so what does this say? You see the options expected move. It's just oscillating back and forth. You see when we start to have movement, it's just another way of looking at the market and seeing if we're going sideways. You see all of these are just a sideways range. And then you start to see the options expected move expand and contract. but you see where the market is moving. It just gives us a playing field. I'd like to use it as like a football field or a soccer field. We usually play most of the time we play within this range. When we're breaking out, that shows it gives a indication of what to expect from the market. We're starting to break to the upside, then we're probably pretty bullish, or they're faking us out and we'll head back to the downside. But it gives us character for how we think about the market. If we keep breaking to the upside, touching the upside, breaking to the upside over the expected move, that means volatility is to the upside. And yes, that is possible. So if we start breaking down to the downside, breaking through that options expected move, then that's what you expect from the market. It gives it its character. And so that's why we look at it. So yeah, we're going to end it right here for non-members. Thanks for joining us here at Options Standard, guys. We will talk to you on Monday.